Hello everyone. Today we'll be dealing with the topic cash flow statement. It is a statement which explains the reason for changes in a cash position for a firm in an accounting year. It is prepared to analyze the cash outflows and cash outflows and to give reasons for these changes. Okay, now let's see what are the uses of cash flow statement. First one, it discloses change in financial position on cash basis. Cash flow statements gives us an accurate figure of what will be the cash balance in a firm on a particular date. So we will be able to find out what is the cash balance of a firm on a date, and we can also make necessary adjustments and preparations if we have less cash in our hand. Second point, it helps in the management of cash inflows and cash outflows. By the preparation of cash flow statement, we can avoid unnecessary cash outflows from our firm, which will reduce our liquidity, and we can also make necessary arrangements so that we get our cash inflows at the right time. Third point, it helps to evaluate a cash position of the firm and to take appropriate measurement. So, for example, if we have surplus cash in our hand and we have not made any extra investments, through the preparation of cash flow statements, we will be able to make necessary investments with the surplus cash. Fourth point, it helps management in formulating dividend policy. Only if we know what is our cash balance, we will be able to give out as dividend to our shareholders. So through preparation of cash flow statement, we will be able to find out what is the current cash balance in our hand. And through this statement, we will be able to give out dividends to our shareholders. The last point, it helps to explain the low dividend payout ratio in spite of having high profits. So there are chances where we will be earning high profits and we will not be able to return it to the shareholders in the form of dividend. That is because mainly we will be having low cash balance in our hand. Through the preparation of cash flow statement, we will be able to find out what is the current cash balance in our hand, and we can also explain it to the shareholders why we are not able to pay the dividend in the form of cash. It is mainly because of illiquid money or the firm is not in a liquid position. Now let's see what are the cash inflows or the sources of cash. Every firm will be having various sources of inflow for cash. Let's see what are they. First one is issue of shares. As we all know, issue of shares is a major source for capital and it also helps to raise funds for a firm. Second one, issue of debentures. So we all know that debentures is an instrument acknowledging debt. Debenture is also another form through which we can raise cash. Third one, long-term loans. Whenever we need money, whenever we are in need of money, we will be approaching various financial institutions and we will be taking various term loans. The third and fourth point are almost similar, sale of fixed assets and sale of investments. Whenever we have various fixed assets and various long-term investments, we will be able to sell it, and through the sale of long-term fixed assets and investments, we will be able to earn money, which is a source of cash, which is a source of inflow for us. Last one, cash from non-operating activities. There are various activities which are directly related to our business and which are not directly related to our business. Non-operating activities are those activities which are not directly related to our business. So we may also earn cash from these non-operating activities. It may be commission received, dividend received, interest received from various other sources such as. Now let's see what are the various cash outflows or what are the uses of cash. First one is a purchase of fixed assets. Every firm will be purchasing various fixed assets for a smooth functioning or for the proper functioning of the production process. Second one is a purchase of investments. Every firm will be having various investments in other investment avenues as well as in other companies. The third one is a redemption of preference shares. Whenever the preference shareholders demand their capital back, the firm has an obligation to pay it back. The fourth point is repayment of debentures. Debentures are issued for a specific time period. So whenever the time period elapses, we have to repay the debentures. The fourth one is repayment of term loans. As we all know, term loans are also taken for a specific term. So at the expiry of that term period, we have to repay the loan. The fourth and the fifth point explains the dividend and the income tax paid by the company. Now let's see what are the components in a cash flow statement. There are three components in a cash flow statement, mainly operating activities, investing activities, and financing activities. Now let's see what are the various cash flows from operating activities. Cash flow from operating activities are mainly through the regular course of business. The main examples of cash flow from operating activities are cash sales, cash received from debtors on account of credit sales, cash purchase of goods, cash paid to suppliers on account of credit purchase, and wages paid. Cash flow from operating activities does not mean only cash inflow, it also means cash outflow. In this, we can see cash sales and cash received from debtors are sources of cash inflow, and cash purchase of goods, cash paid to suppliers, and wages paid are sources of cash outflows. Next, we'll see what are the various sources of cash flow from investing activities. Investing activities as a business includes the purchase and sale of fixed assets, investments, etc. Let's see what are the various items coming under this head. First one, the purchase of land and building, purchase of plant and machinery. Then comes the main two outflows, which are sale of land and building and sale of plant and machinery. As I said earlier, cash flow from investing activities also does not mean only cash inflows, it also means cash outflow as well. In this, purchase of land and building and purchase of plant and machinery explains cash outflows. Sale of land and building and sale of plant and machinery explains the cash inflows. Now let's see what are the various factors which comes under the heading cash flow from financing activities. The financing activities of a firm mainly includes issue of shares, issue of debentures, repayment of loans, redemption of debentures, redemption of shares, etc. Through issue of shares, the company can raise additional capital as and when it is required. The company can also raise necessary funds through issue of debentures. Whenever the preference shareholders demand their capital back, the company has the obligation to redeem these preference shares. Through the redemption of debentures, the company has to pay back the debenture holders the money contributed by them after the expiry of the complete tenure. And the company is also obligated to pay back the loans raised and also to repay the other term loans which the company has taken during the course of time. So, issue of shares and issue of debentures are sources through which we can raise amount. Redemption of preference shares, redemption of debentures are the outflow of cash which comes under the head financing activities. Loans can be raised and it is a source of fund, and through repayment of loans, the cash is outgoing from the company. So these are the various factors which comes under cash flow statement and various activities which comes under cash flow. Thank you.